I think there's three things you need to do here. One, income. Income rules the world. Income pays your bills. Income can pay your mortgage. Income does everything. Without income, you got nothing. Income takes hard work. It's hard to get up the ladder, earn more income. Secondly, is you need to have optionality. You need to have things that can pay off. A startup or a hobby business on the side can give you optionality because you can build a business, and a business has intrinsic value, plus it can increase your income. That will never happen if you work for a corporation. Yes, you can have a great career and do fine, but you'll never have that extra upside that you and I have had by building businesses. So that is another thing, is focus on your income, work hard, look for other opportunities that can leverage that income and opportunity set that you've got for you. And then thirdly is, if I've got this income, look for investment opportunities that can change my life. Let's look at other opportunities. So maybe not everybody likes crypto. Another thing that is patently obvious is technology is not going away. Now, it's not easy to pick the right technology stocks, much like it's difficult to pick the right NFTs or tokens unless you really know what you're doing or you know that particular company or that project. But if the thesis is that technology is going to continue to have this ridiculous adoption, whether it's AI, EV, whether it's robotics, whether it's genetic sciences, all of these things that are around us, space travel, well then, if it's being sold in a fire sale because everybody's panicking, well, surely that makes sense because technology has outperformed the market for the last 40 years. So you always want to be buying technology. So if you're thinking of your 401k, you're in your 30s, you look at your 401k and you've still got your income, because that's the most important thing of everything. You've got your income, you should be going, okay, I should be buying technology stocks and I should be buying crypto because these are long-term mega trends. So the investment thesis, I don't believe so necessarily. There's a lot of macro similarities with the past episodes, and everybody makes it very dramatic. There tends to be a lot of doom porn, and I've been a proponent of that as well. Everything looks like the 1929 crash. Everything looks like we're going to go to World War II. Everything looks like, it's 2001 all over again. Yes, those things happen, but things go on. And if you bought tech stocks after 2001 crash, you'd be very, very wealthy indeed. If you think of Jeff Bezos, he launched Amazon, bright-eyed and bushy-tailed, has his IPO. It explodes in price. Everyone's like, oh, amazing, an online bookseller. It then falls 96%. Right, so this is exactly what I went through in crypto, exactly the same. And then what happened is, well, unlike most of his investors, he held on. And it went up a lot again, still didn't make up the high. It fell another 80%. It went up again. It then fell 60%. And then before you know it, this online bookseller was suddenly worth more than all the bookselling companies in the world added together. And it was still trading at a price earnings ratio of like 800. Everyone's like, this is crazy. This is a bubble. But what we didn't realize is he was building a network, this network for e-commerce, and then the computing power that drives it. And so over time, Amazon just did that. And these are the things you need to think about in this: is where are we in the volatility, and is this going to survive? Those are the two questions. And if the long-term trend is there, then you should be buying into all of this. So I had my Global Macro Investor Roundtable, which is a bunch of my subscribers from my kind of very high-end institutional research service, a bunch of the world's most famous hedge funds, family offices, asset management firms, and we all have this little enclave here in the Cayman Islands with a lot of wine and a lot of discussion and trade ideas and stuff like that. And generally people are a lot in cash. The real estate developer guys, the kind of wealthy guys who were in real estate as their primary thing, a lot of them had sold quite a lot. Then the hedge fund guys were very concerned about recession, but were looking, and so they were buying let's call it cash, bonds, cash, anything to kind of just not be involved in risky assets like stocks and stuff. But they were looking for the opportunity for the other side, which is what is that opportunity? And that opportunity was technology, crypto, and commodities. Commodities have gone up a lot recently, but we've got this, it's this greening thing that's going on, right? We're going to green the world. We have the political willpower to do it, and it's going to happen faster than the market can take. And that means we underinvest in mining stuff, and we overinvest in battery technology, wind farms, solar farms, right? And the idea is eventually you accelerate this so much that it becomes the adopted technology and electricity becomes cheaper from doing it. The issue is there's not enough copper for the electricity we need to generate. So we're about to go into this enormous copper shortage. You don't notice it now because the economy's weakening, and so less people demanding copper. But once we come through the other side of this, you're going to have this huge demand for copper, and it's a problem. But it's part of that green energy transition. Green energy transition also is going to require a lot of other stuff to build these wind farms, these solar farms, the hydrogen power, and whether we go to atomic energy or whatever it is. It's a whole change in how the world works. It's very similar to the 1950s when we kind of rebuilt America, factories and all of that kind of stuff. So that moment in time means that these guys wanted both commodities and technology, because they know this one's probably kind of a good 5 or 10 year cycle, and the technology cycle is limitless right now. So that's, I guess, where most people were thinking. But everyone was very nervous over this next 3-month period about what happens to the economy and what could happen to markets. So we talked about income plus opportunity. So they've got the cash. So, one of the world's best technology investors, Coatue, I think they're 70% cash.
Whoa.
Which is extraordinary, because these guys are, they're aggressive technology investors, 70% cash. There's a whole bunch of people who are. So what they're saying is the future opportunity is going to be big, and it's going to be cheaper than it is today. Now, will they time it properly, etc.? Doesn't really matter, but here's what the smartest people are saying is the future opportunity is better than the present opportunity. We don't know when they had that bet. They might have done that 4 months ago, in which case it's been a very good bet and they'll be looking to deploy. And if I read their investor letter, they say they're now starting to look to deploy stuff into interesting opportunities where things are really cheap, which is the thing I said before. When the market throws out the baby with the bathwater, that's when you start finding the things you really like. In crypto world, things like Solana, great project, down 85%. There's a whole bunch of these big layer ones with network adoption effects already. These are not super speculative assets. They're obviously speculative, risky, but not super risky. They're all down 80, 85, 87%. Okay, that becomes interesting.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.